Hello and welcome to the PPW pod, bringing you news, views, and interviews from the world of real estate marketplaces and prop tech. My name is Edmund Keith. I'm joined, as always, by Simon Baker, today from Miami, I believe. How are you doing, Simon?
Yes, I'm doing very well. Nice, sunny, and incredibly hot.
And our guest today is Jorge Combe, who is coming to us from Mexico City. Am I right, Jorge? I'll introduce you in a minute.
Yeah, that is correct. We're here based in Mexico City.
So, Jorge, am I right in saying you're the CEO and co-founder of a company called DD360? Now, I've kind of learned my lesson in the past with just asking people what their company does and then listening to 5 minutes of what their company does. So I'm going to say to you, am I right in saying what your company does? And you're just going to tell me true or false, okay?
That is fantastic. That is perfect.
Okay. So am I right in saying DD360 is primarily like a B2B financer for real estate development that has also moved into B2C mortgage lending?
Yeah, that is correct. That is correct.
And am I right in saying you've also got an aggregator of real estate listings on the top of that called Monopolio?
Yeah, I think we're going to be spending a lot of the time talking about Monopolio. I think aggregator is a boring word. We would like to say that it's more like an intelligent search engine what we have built. But yeah, definitely, yeah.
Okay, and I guess the more controversial question of the three I've got written here, your company is the owner of one of the most complete sets of data on the Mexican real estate market.
Yeah, that is correct. Yeah, we have been assembling this data for the last couple of years, and I would say that we have definitely the most complete data for the Mexican market.
Okay, so that kind of contextualizes it a little bit. The reason we wanted to come on, other than the fact that Simon and I have spoken to you off the podcast and you're an interesting guy, is that on a recent episode, Simon and I were talking about whether it kind of makes sense for a financial institution. In that conversation, we were talking about a bank to own a real estate marketplace. Now, Simon said he thought that it maybe didn't really make sense. Since then, we've both met and spoken to you. You're a company you're not a bank, but you are a FinTech company at heart, right? And you own a real estate marketplace. And what we're going to explore today is why. Why do you own, or why did you build a marketplace on top of a FinTech company? I guess we'll start there.
Yeah, I think that is a very open question. And just obviously, in order to answer that question, I need to give a little bit more story than just the 3 bullet points of what we do and what we are. So we began a company, DD360, my partner and I. We used to be bankers at Goldman Sachs for a number of years. Martin was the one that was running Latin America. I was running a few verticals. One of them was real estate. And then we realized that there was an opportunity to do subordinated lending, especially for residential real estate. So we quit Goldman. We started as a fund, just doing subordinated lending. But then we realized that there were so many inefficiencies in the Mexican banking sector that it not only made sense to do the subordinated portion, but also to do the construction loan. So the first thing that we did is that we did an integration forward to the construction loan. And then we more recently realized that there was another opportunity to do individual mortgages. So at the end, whenever you take a look at what we have on the FinTech side, we have just covering the full spectrum. So we begin with a land plot. We can do a pre-development or a subordinated loan. Then we do the construction loan as the developer starts building the residential units. And then we can individualize and we can start giving individual mortgages. As we were building this company, this FinTech company, we realized that there was no data. So in order to underwrite the project, it was extremely difficult. So the developers had to go just with traditional ways of doing mystery shoppers and things like that in order to gather information about what was going to be the absorption and what was going to be the sales price. And we were just wondering what would happen if in Mexico we had services such as Zillow and transparency such as Zillow in terms of pricing, in terms of the history, in terms of an MLS. So given that in Mexico we didn't have anything and there was no transparency, we say, hey, why not? We start it from scratch and why don't we build it for ourselves and for our clients? And that is the way that we began Monopolio. So Monopolio began just as a way to solve a gap that we saw in the market because we believed that the market needed more information. And at the beginning, the only thing that we wanted to answer were a couple of things. If a developer comes with a situation that he wants to build in this land plot, how we can have a better estimate of what is going to be the sales price that he will be able to sell and what is going to be the sales absorption. But as you start answering these two, what seem to be very simple questions, you realize that in order to get to those two very simple questions, if you want to do it correct, then you need to estimate the whole demand and the whole supply that is going to be coming to the market. And then at the end, we just finished building this very big data base, which is Monopolio. And we can get into more detail the way that we do it and what we do it. But at the end, we have just one of the most comprehensive data sets about used and new homes in Mexico and the estimates of what's going to be the supply and the different dynamics within the market.
Okay, so to help me understand this just a little better, the core business model is financing and making a margin on the money you borrow versus the money you lend. At the end of the day.
That is correct. We are just like if we were a bank. By regulation, we are what is called in Mexico a SOFOM, which is a non-bank bank. We are kind of a fintech in the way that we use a lot of technology. We have 12 people or 15 people that are from administrative and finance, and we have 100 engineers and product managers and data scientists. So we're really, really skewed towards technology. And that's why we're more on the fintech side, if you would like to describe us. But at the end, this is a balance sheet business, Simon. So we keep the loans. We're not an originator only. We keep the loans. We have a loan book. We have everything. If you took a look at the B2B business for development in Mexico, we would have right now close to 10% market share. There's some parts in Mexico City, especially, where we can have 20% market share, even more in Roma, Condesa, all these parts of very fancy parts of Mexico City, we would hold a market share of close to 50 to 70% market share. But we're just a financing company where we hold the loans within our books and we see them mature and go through the different stages.
Okay, so, and you started by focusing on the development sector. Why would a developer, and I assume the cost of debt from you is more expensive than a bank. So why would a developer go with you rather than the bank? Is it because they can't get the bank loan? Or is it because you're quicker and easier to deal with?
Yeah, I think that there's a couple situations. The first one is you need to understand the Mexican banking sector. So in Mexico, there's 4 or 5 banks that hold 80% market share. So in that sense, banks tend to be not the most efficient ones in terms of the customer service. So the speed at which they move and the service that they give potentially is not the best, or it could be best. And that's why we compete with banks in this specific niche market. And given that we are only focused on this vertical, we are way more savvy and way more experienced than the banks, no? So for example, if there's a developer that comes with us, and right now with the use of Monopolio, obviously we can be even more efficient, but if there's a developer that comes with us, we can do a market study and we can analyze the project and we can tell him what he should be building, what would be the layouts, what is the market dynamics, what is going to be the price, what is going to be the absorption, and just be more like his partner and not the counterpart. The bank is going to be on the other side of the desk, and he's only going to be receiving information and qualifying information, but he's not going to be putting any type of advice or putting anything that is going to be generating value for the project. In addition to that, we can make a decision whether we want to participate or not in a project, literally in a question of hours, and we can formalize a loan in 1 or 2 weeks. For a bank, it would take, 6 months, 9 months, potentially, to get into a project. So we're talking about months in difference. So even though we used to be more expensive than the very large banks, I would say that we're very similar priced in terms of the medium-sized banks. So, but the efficiencies that they get just in terms of the analysis, so these 6 to 9 months of having the land plot without being productive. And then for every disbursement as well, we can be way more efficient in the way that we do the disbursement than the banks. Instead of all the bureaucracy that you need to go in here with the use of technology, it can be a way more expedite type of process. And that is what differentiates us. And that's why, for example, in Mexico City, out of the top 20 developers, we work with 12 of them. So we're not with the subprime type of developers. I would say that we're with the prime developers, and we can continue expanding with them.
Okay, and they pay a slight premium for faster, better quality, better understanding of your business, and everything through to the disbursements, which are, it just makes life a lot easier for everyone involved.
That's correct. And we're talking about marginal differences. So we're not talking that. So for example, the most efficient banks in Mexico, potentially they could be lending at the reference rate plus 350, and we can be at the reference rate plus 500. So you're talking about 150 basis point differential between the most efficient banks. And if you go to a medium-sized bank, it's going to be similarly priced than us.
Okay, which makes a lot of sense. And if by specializing in this one segment, you actually create a large customer base. I can then understand the need for data, right? Data on demand, data on supply. Just the more data you got, the better you can reduce the risk of any loan that you're placing out there, and basically better price the loan.
That is
how
correct.
does Monopolio sort of fit into all of this? Is this a data collection tool
Yeah,
first, and then as a lead generation tool secondly? How does this all fit together?
so Monopolio, the way that I would describe it right now, and Ed, you were mentioning at the beginning that we're an aggregator, and in a sense we are. So the way that we do it is that we go out, we look for 100% or at most that we can of the supply, and this can be either through relationships that we have with portals, with the different marketplaces, with the different brokers, and also with some pages. We could do this type of relationship either formal or informal. And if it is formal, it can be through the use of an API. So we connect directly with them. We gather all the information. Once that we have all the information from the different sources, then we can compare them. So we can take away the duplicates and we can take away all the frauds or anything that looks suspicious. We don't show it within Monopolio. So we do a little bit of quality assurance of the things that we're going to be using. But then I think that the difference that we have between Monopolio and the rest of the marketplaces and the rest of the portals that you see out there is that the portal at the end is a classified business. So at the end, I'm charging to either the broker or the developer just to be listed in my exchange. I have a lot of traffic, and then I can be monetizing through the use of advertisement. I think that in Monopolio is exactly the opposite, because in Monopolio, given that we are aggregating from different sources, we're not charging anyone. And at the end, the only thing that we're looking is to have what is going to be the most comprehensive buyer-friendly type of platform. We have this, with the use of AI, we have this type of smart searches and smart algorithms where the buyers can put their preference or what they're looking for. So for example, if I'm looking to buy a home to live, we can be looking for what are going to be the opportunities that are going to be below the NAV or the value that we place on them. If I want to have a home as an investment and I want to buy an apartment because I want to rent it, then the algorithm is going to be running comparatively what is going to be the best cap rate opportunities that you can look out there. And it's going to be showing to you the best opportunities. And I think that is the main difference between us and the rest of the portals, because they cannot do what we do. Not that much in terms of technology, because for the technology, potentially we're a little bit ahead of them. But the results of the search that we give you are completely unbiased because nobody's paying us. And for a portal, it would be very difficult because they would be disrupting their own business model because they need to show you whomever is paying the most. And we finished with this business model at the end. And getting back to your question, Simon, because what we wanted to gather was the data of what were the trends and what was the demand. It was very difficult to find what was the demand for a specific development and also to predict what was going to be the demand. Because remember that on the FinTech side, what we have is a factory, but it's a very slow factory, the development. So you put a land plot, you wait for 2 years for the permissions and for the licenses, then you do the construction, and that is going to be taking 3 to 5 years, and then you have the finished product. So you need to be estimating what is going to be the demand in next neighborhood, not right now, but what is going to be the demand within 3 to 5 years. And to do it just with the use of the mystery shoppers, which was the way that it was done in the past, it's almost impossible to estimate that. In order to do that, you need to take a look at what are the long-term trends that you're finding on a neighborhood basis. And with Monopoly and with the traffic data that we're getting is that we are refining the data so that way we can do better underwriting. And at the end, that is exactly what we're doing. We want to gather more data, better underwriting, and that is going to be converting into better loans and better for the FinTech business in the quality of the loans that we're giving and the advice that we're providing to the developers.
Okay, so you've probably already answered this in one way, but I want to make sure that everybody out there is clear on this. You essentially built a marketplace on top of a FinTech business just for the data. You're not monetizing the marketplace at all. You're not selling leads to anybody. You're not doing anything like that. You built a marketplace almost by default so that you could get better data to power the FinTech business.
I'm going to be very transparent here with the way that we're developing this app. Potentially, this is going to be changing in the future, but at least what we're 100% sure is that we're not going to be charging for leads. So whenever we generate a lead, we're going to be sending it to whomever is the real estate agent for free. So that is not the business model that we want to build. We think that in the future, most of the business and most of these type of marketplaces are going to be on free type of services. So what is our business? Because we're doing this for a reason. The first one is data, like we were mentioning, and that is in the short term. In the second stage, given that we're providing mortgages as well, we think that we can originate a lot of mortgages through the platform. So that is going to take us to have a negative TAC or a zero TAC type of opportunity. But at the end, this is a lead generation for mortgages. And the way that we envision that this is going to be working for our individual mortgages is that it's relatively good in the sense that we're aligned with the buyer. Because if we help them with the use of Monopolio and the algorithms so that they can buy a property, for example, if you're looking for a property that is worth, I don't know, $200,000, and with the use of Monopolio and this smart search, we can find it for 150, then we want to be very aggressive trying to be the one that is providing that mortgage. Because in our eyes, given that you bought something in 150 that is worth 200, you already have 200 in equity, 550,000 in equity. So we want to be very aggressive whenever there's a bargain. And in that sense, we're aligned with the buyers, not only in the search, but as well in the financing. So whoever is finding the best opportunities, we want to be the ones that are financing those ones. And I think that this is the short-term type of monetization. I think that there's medium-term monetization where we can sell appraisals. In Mexico, the appraisal business is something that hasn't been disrupted for many, many years. So it's still done in the very old way, where there's a guy that goes to your homes, takes pictures, he does a survey, and it can take, I don't know, a week or 2 weeks just to get an appraisal in Mexico. In Mexico, you need appraisal for every single transaction. If you're going to put a lien, if you're going to sell your property, you need an appraisal. It's very expensive to get an appraisal, a certified appraisal in Mexico. It can cost you 10 to 20 basis points of the value of the home. We think that with the technology, we can disrupt this market and we can do it at a fraction of the cost. But I think that is going to be stage 2, stage 3. I think the first two are the ones that you mentioned. So data, origination of mortgages, and then potentially we can do the appraisal business. But we never want to charge people for the search. We never want to charge brokers or sellers for sending them leads. Everything needs to be for free.
Okay, I want to go back to what you mentioned there about being unbiased. I think the reason that I got in contact with you in the first place was around one feature that I saw on Monopolio that I really liked, which I thought is very gutsy, which is this value for money filter, right? So it seems to me that just about every real estate portal in the world these days has an AVM. So every real estate portal pretty much in the world will have its own data-backed opinion on what, whether every listing on its portal is either properly priced or too expensive or cheap, but they'll never show that to the consumer. You guys do that, so every listing will say, it's, let's say, 5% over what we think it's worth or under, and you've even got a filter for it. Firstly, have you had any pushback on that? Do you get agents calling you up and saying it's a disgrace that you do that?
No, and I think that is exactly why we never want to be charging anyone for anything. Because if you're not charging anything, given that I'm not working for the agents and given that the agents are not paying me money, I think that I can be transparent at least with the information that I think of how much it is worth. And that is the main reason, once again, of why the portals cannot do whatever we're doing. Because if I am charging you for an advertisement or to be listed in my portal, and then all of a sudden I'm saying that the home that you're trying to sell is extremely expensive, then I'm boycotting you. So that is why transparency hasn't flourished in this sector. But that's why we think that by having something that is free to the agents, free to the buyers, is the way to go. And that way we can have an unbiased view. So we love this type of transparency. We haven't had any type of pushback. At the end, we couldn't care if there's pushback from the sellers, because what we want to build here is something that is buyer friendly, not seller friendly, because what we want is to be helping the buyers to find the best opportunity. So what we have gotten in the past, it's a lot of people telling us, hey, we see that you're getting a lot of traction in the Mexican market. How do I list my properties? I want to be within the first results of Monopolio. I tell them, don't worry, if you already have a professional website, Monopolio is going to go and it's going to look for you and it's going to have you. You don't need to list in Monopolio. And then the second thing, how do you appear in the top results? Just have a better result, have a more attractive type of price. If you have a very attractive price, if you have good pictures, if we can qualify the listing, then you're going to be in the top of the results, because we want to help the buyers be the ones that are finding the best results, not the sellers be showing you the best ads.
Okay. One more quick question before. I've seen Simon taking some notes. I think he's building up for some kind of critique of the business model, maybe. One quick question for me. So that's been the reaction from the agents. I imagine to some extent you want to kind of disrupt real estate portals as well. The Mexican market's quite competitive at the moment. What's been the reaction there? Have you had real estate portals reaching out to you? Are you, are you looking at doing partnerships with them, anything like that? Or are you just not focused on them at all because your business model is so different?
Yeah, I'm gonna hold this on a no-name basis, no. But I think that we have experienced all different type of reactions. I think that we have, on one hand, we have portals that are excited that there's this type of technology that with the use of AI, we can, for example, analyze the different pictures or photos, and we can tell you whether the apartment has a balcony, whether the walls are green, whether whatever. No, so I think that there's people that are excited with the technology that we're building, and I do think that there are other portals that see that this could become a trend. So specifically, there were one where they told us, "I don't want my properties to be listed in Monopolio." And at the end, we don't need the portals, because in reality, you only need the portals whenever there's the only ones that are having the listing is within them. But usually, whenever you see a listing that is in a portal, usually you would be finding it as well in the real estate agent's website. So the way that we do it is, if the portal doesn't want to participate in this one, it's fine for us. We would go to the real estate agent's website, and at the end, the proposal to the agent is so basic and so transparent that I think it would be difficult to say no, because at the end, we're going to be going to your website as a real estate agent. We're going to be taking that data. We're going to be showing it in Monopolio. And whenever there's anyone that is interested in that property, we're going to be sending it for you for free. You don't need to pay us a referral. You don't need to pay us nothing. So at the end, given that we're not charging anything, I think it's something that has been very well taken by agents. I think that in portals, we have had this type of mixed type of reactions. Some of them potentially see us as a threat. Others see us as a complement. So with some of them, we do have an API, we do have an integration, and they're asking for information in exchange, and we're more than happy to provide with information and with more things in exchange.
Okay, thank you. I'm going to hand over to Simon, who's pretty ready with some notes.
Yeah, no, I'm curious, right? Because if you think about, clearly the finance model makes a lot of sense. Clearly, setting up something like Monopolio for data, so you have better algorithms, better risk management, makes a lot of sense. The interesting challenge is then you start to move into lead generation now with, and then you are getting into the world of the aggregator and the world of the traditional portal, because that's what they do, right? They get as many listings as possible, and then they generate as much traffic as possible to look at those listings. So you'd have to say what? So it's Inmuebles 24 would be the leader in the market?
Yeah, okay. Between them and Viva Anuncios, they hold close to 50% market share of the traffic.
Yeah, a lot, right? And so I just had a quick look on SimilarWeb. So I thought, why not, right? Gives an idea. So Inmuebles 24 has 5.4 million monthly visits. I put in Lamudi there for the fun of it. They come in at 1.6 million, and Monopolio came in at 34,000. So the question I've got for you is to go to the next step, right? And to have a vast quantity of mortgage lead generation coming out of this, because that's the monetization model off the back of this. How do you plan to grow traffic?
Very good question. The numbers are probably 1 or 2 months outdated, Simon. We got this last month, we got 120,000. So we're growing just like 3x or something like that. But still, it's a tiny number, no? Whenever you compare it to 4 million, so it doesn't matter that much.
Yeah, it's a big difference between that and 5.4.
Yeah. So, but I see that rather than as a critique, I see that as an opportunity. In the sense that it's like if right now you were telling me it's 1994, hey, how you're gonna be competing? How is Zillow gonna be competing? Given that this newspaper has so many readers and Zillow doesn't have that many readers. I think that is similar in the sense that the technology that we're having. One second.
I'll differ on that, because they were two fundamentally different things. A newspaper had a clear. And I know because I competed against the newspapers, and they have a very distinct footprint that's reliant on how far trucks can drive in a day to drop physical papers off, versus electronic, where anyone in the world can come in. What I'm interested to understand is, how do you think about growing traffic? How do you think about building brand and
I'm
growing
going to that. Then I think that, and I was making reference to newspapers and to portals because I think that the change in the technology, and I know that you have potentially different views, but I think that the change in the technology that we're bringing with the use of AI is the only one that is allowing right now to have something that is going to be buyer friendly. So we have been seeing 20 years of portals that are not buyer friendly in the sense that they're showing you ads, they're showing you crappy things that potentially you don't want to buy, but given that they're paying the most, then they are pushing it for you. They have been extremely good businesses, and that's why they're extremely sticky. And I know, and I have heard you guys talk in the past, if there's something that can disrupt the portals, and potentially you say that no, that there's very difficult, at least in the medium term. I think that with the use of AI, I think that this technology can disrupt the portals. And I think that it's in a couple of things. The first one is by the way that we can aggregate information and by the way that we can provide value-added services to the buyers. So we can do things that portals cannot do. No. So for example, we can tell you that if you want to say, I want to live in front of a park and show me the best apartments with less than 4 million pesos, then we can do something that is not going to be neighborhood related. But the second thing is not only that we're going to be showing things that are buyer friendly, is that it's little by little the change that we're doing. But at the end, whenever you were going to build a portal, you needed to build first the audience, so that way you can monetize to the sellers, which are going to be the ones that are going to be providing you the revenues. I think that in this sense, we can build the audience by having something that is buyer friendly. It's going to take some time, definitely, but this is going to be a slow and compounding type of movement. So given that we're at 100,000 visitors per month, potentially Inmuebles 24, like you were mentioning, is 40 or 50 times bigger than us. And then Inmuebles 24 shouldn't be of that size. In the Mexican market, I think that we have a sub-representation of portals within the real estate sector. Whenever you take a look at the states, and you're going to have these figures way better than me, but I think that in the developed markets, usually you would have one visitor per person that lives in the country. So in the States, you would have 300 million visitors in Zillow and those type of portals. In Mexico, we have like 5 or 7 million visitors, and we have a population of 125 million. So the portal should be increasing substantially. I think that we have a sub-representation in portals and online type of marketplaces. And by being the only one that can create something that is buyer friendly, we think that we're going to be beating this market. This is small increments and small improvements. We're not going to be beating any of these names that you just mentioned within the next 6 months or 12 months. But I think that at the end, we're going to beat them just because we have a way superior product in the way that you can do a search. Now, in order to do it, and you were talking about traffic, I think that the strategy that we have been trying to incorporate, and that's why we're growing like 100% or 200% month over month, is focusing on the heavy users. And for us, the heavy users are a couple. The first one is the real estate agents. And those are the guys that are using portals on a daily basis. And the way that we are doing it is that we facilitate and we help them in to have these smart searches where they can save a lot of time. And then the second one is by focusing on investors. So investors are these heavy users that are usually a lot of the time or on a daily basis recurring to this type of websites. And we're building a lot of solutions so that they are the ones that are getting into our website. I think that the strategy that we have, and once again, we can be right or we can be wrong, but we want to focus first on the heavy users, which are going to be these two groups. And then we think that we can continue having organic growth. Given that we don't charge anything to the leads and we don't charge anything for the searches, we don't think that we're going to be investing a lot of money into marketing. We're never going to be seeing that we're going to be putting billboards and we're going to be just putting 20 ads in the airport like Idealista would be doing in Spain. Whenever you get to the airport, we're not going to be doing that. We believe that the product will speak by itself. And we are 100% sure that we have a way better product than whatever of these portals that you mentioned. And at the end, we're going to beat them. The last thing that we have is we have patience. I run ultra marathons. I have done 250K. I'm going to be doing another. So we know that the race starts usually after the kilometer 100 or 150. We are right now in kilometer 5 or so of the ultramarathon, so we can be very patient. We make a lot of money in the fintech business, so we are not in an urge to try to make money in Monopolio. In fact, we don't want to make money in Monopolio. So given that we are in kilometer 5, we still have ahead of us 245 kilometers. We can be patient, and we're going to be improving 1% per day, and we're going to beat them. I'm 100% sure that we're going to beat them, because this is the future. Being on the side of the buyer and having a better product is the future, not showing ads to the buyers.
Okay. Some thoughts based on some experience. Okay. So what I'm hearing is what Trulia used to say. They were very much, when Pete Flint was running Trulia way back in, a decade ago now, they were very much consumer focused, buyer focused. We're going to make this the best buyer experience on the planet. No different to what Homes.com is doing at the moment, where they've said they want to have the best buyer experience on the planet. Okay. That doesn't automatically translate into more buyers. You have the most, and there are so many portals I talk to around the world who are focusing on the buyer. They're using AI. They're allowing people to search by, as you said, a park in front of the house, don't care what the suburb is, and so on. This is becoming everyday. Okay, so that stuff will become everyday. It'll just become an alternate way in which you can search through the database of listings. Okay, so I absolutely understand what you're trying to get at. I think building a better mousetrap doesn't mean the mice are going to come. Okay, it just means you've got a better mousetrap. You're still going to have to, I think, personally believe that you're going to have to focus heavily on creating awareness and driving traffic. Yes, you'll get great growth. I mean, if you're coming off a low base, you're going to get 20-30% growth. That's easy to do. But it's when how do you crack through that million? How do you crack through the 2 million mark? How do you crack through the 3 million mark? Historically, a lot of that traffic was being driven by Google, but Google has updated algorithms and made it much harder to generate traffic. A lot of the vertical search sites have had massive traffic decreases. We're talking 30%, 40% in the last sort of 6 to 9 months. And historically, they could get that traffic back, but they can't because of the way the algorithms have been changed by Google. This is just some of the things that I see out there at the moment. So I think, personally, if I was in your shoes and I had an amazing mortgage capacity or a finance engine on the back, I would be absolutely doing what you're doing. But I would probably take a slight different twist on it. And I would actually be thinking quite heavily into the traffic driving. How do I do it? How do I potentially do some sort of embedded deal with maybe one of the other players out there? Pick a number 3 player, Moody or something, number 4 player, wherever they are in the market. Someone who already has 1.52 million traffic. Okay, that's how I would be thinking about it. Taking some elements of your experience. A lot of stuff you're talking about, and it's just because I get to see a lot of things I'm hearing about people doing, okay, and seeing people do. So I think building your own Monopolio is a great idea. Having a very, there's no use doing the same as everyone else because it doesn't make any difference. You need a differentiation, and the differentiation being in the consumer experience makes a lot of sense. Okay, but the question is how are you going to, and this is not to be answered now, but to be thought through, is how to really crack through from that 100, 200, 300,000 visits per month to much higher. Yes, I agree that the number of people in Mexico, there should be a lot more people searching. That's great, but I see that in many markets. Okay, it just happens to be what's happening in the market. Because the reality is a lot of people can't afford to move. They can't actually, they're going to live in their house for a much longer period of time than in other markets where they're switching more frequently and so on. Less access to financing and all these other sort of reasons means there's less search that occurs. And the other thing I think is a very good move, which is how do I focus on the investor segment? But it's actually a very hard sector as well. I mean, I spent how long? We real estate investor in Australia. I think we own that for 10 years. So I've spent a lot of time in the sector of getting to investors, and how do I give them access to high quality data to make better investment decisions in a very user-friendly way, and working with banks to bundle up mortgages so I can transact very quickly. I think you're going down a very interesting path. I don't think it's, while I admit, if you're into ultra marathons, then this could be a long path, but it might actually be a very long path. Okay, and I think finding some shortcuts. If you're going to run an ultra marathon and you can find a shortcut, I find the shortcut. I'm not going to run 250 kilometers. I'm going to find a way to knock off 200 of them to do the 50. Right, and if you can do that, that would make a lot of sense. Right, you have to find that shortcut, and I think there are a number of, because what you're really wanting to get access to is consumers who are ready to buy and need a mortgage, and are low risk, right? So that they're not going to default on the mortgage. Okay, and if you can get that through another channel or through partnering or whatever, I think you've got a chance to really push this over the top in going after this segment, because you've already got the other segments nailed, the helping developers, etc. You've got a fantastic business. No one's going to debate that point. But I just think in this sector, there are a lot of interesting lessons to be learned from people, especially because there's a lot of experience in how to really build these things and get beyond the 100,000, 150,000 visits to way up in the 1.5 million visits. Okay, that's how I think about this problem. That's the real issue to solve.
Yeah, I think that definitely there's different ways to solve this in the medium and long term. I think that, just getting back to what I was mentioning, with the way that we envision that this is going to be, it's going to be a rocky ride. It's going to be in order to have sustained long-term growth, it's not one S curve, but it's going to be a series of very small S curves. So I think that we just had our first S curve by getting to these 150,000 visitors on this month. We think that we have already planned what are going to be the next iterations that we have for the next 2 to 3 different releases. So we do think that we have covered up to probably 500,000 visitors. But like you mentioned, one of the things that we like about what we're building is that we don't know how to get to the top of the mountain, but we know which is the mountain that we're going to be climbing, and we know which is the next critical step that we need to make. And in that sense, once that you make that step, everything starts becoming a little bit clearer. Should it be through an acquisition? Should it be through a partnership? I think that we're open. I think that there's so many things that we can do. But at the end, the only thing that we're focusing is that the marketing should be the product, and that the organic growth that we should be having is by having the best growth just by the people recommending and telling them that they should be taking a look at Monopolio. And just to finalize on this topic, and I know that I already mentioned this, but we can be extremely patient in this. We want to hear consumers. We want to hear the agents. We want to hear investors and what they want to be built. But we can be extremely patient. And I think that is one of the main differences that between us and the rest of the proptechs. Whenever you take a look at the rest of the proptechs in the world, usually they're burning money. So they would have, 6 months, 12 months. So they need to make desperate moves in order to make money to survive. So they start doing charging for leads or charging for something. But we don't need to charge for anything as long as we're creating value, creating the traffic, and creating a long-term sustainable business model. And I think that that's why we believe that Monopoly is here to stay. It's going to be a compounded growth. And as long as we continue growing month over month, we're going to continue to be happy, keeping our eyes open. Obviously, you have a lot of experience, so all of your advice is very well received. And obviously, we need to be learning from people such as you guys that you have been in this sector for many, many years. We're news in a sense in this sector, but we are learning a lot, iterating a lot, pivoting a lot. And so far, we're having a really, really good traction, which we think that we can continue in the future. And at the end, we think that whomever has the best product wins in the long term. Hopefully, it's not going to take the ultra marathon 20 years. Hopefully, it's going to take 4 years or 5 years. But even if it takes 20 years, we're ready to do so. As long as we have the best product, and we're willing to invest as much as we need in order to have the best product for the buyers, and everything is going to be for free for them, so they have the best experience and they can start looking and finding the best homes. There's one thing in Mexico that has happened that potentially doesn't happen in the rest of the world, but real estate in the rest of the world has been something that has helped people to go from low class to middle class, or middle class to high class, in the sense that it's a saving type of mechanism. Real estate in Mexico, we have not had that, because there has been a lack of access to financing, and there has been a lack of access to good opportunities. I think that we want to disrupt that one. We want to offer the financing, and we want to offer the best opportunities for people so that they can start saving. And by the use of having this closed ecosystem, where you can not only look for the opportunity, but also you have already the financing that is in place by the same player, which would be us. I think that is something that can be very well received by the market, and we're aligned with the buyers. We want them to buy the best opportunity and at the cheapest price, because that sense we're going to have more equity, we're going to have more collateral, and we can be more aggressive on the loan.
I want to come back, Jorge, to something you just said there. You guys are kind of new in all of this, marketplace world. You're a fintech business at heart. How did you go from, like, culturally, from being a fintech to building a marketplace? Personally, I'm kind of surprised that there aren't more fintech or banks that go into marketplaces. So there aren't that many examples out there for you to follow. Which companies were you looking to when you decided to go into building a marketplace? Like, how do you change the culture? Do you have to hire a whole bunch of people who know what they're doing, or did you guys just kind of teach yourselves as you went about marketplaces?
Very good question. And no, everyone on the team is new at this, so we're having fresh eyes. What we're very, very good, I think we're very good at underwriting loans. I think that our experience is on the fintech side. We once again, we work at Goldman Sachs and different places in investment banking, so we understand finance, we understand the structures, we understand how to do all that type of complex financial terms from many years. No, but from this PropTech side, none of the team has any type of experience. So I would say that we're learning, and I think that at the end, what we are trying to build, starting with me, is an organization that learns continuously. So usually we're launching right now A/B testing for absolutely everything, and there's a couple things that we're trying to do. First one is being extremely close to the consumer, and for us, the consumer right now, like I was mentioning in this initial stage, it's the real estate agents and the investors. So we try to be as close as possible. I don't think that there's anyone else in Mexico that has so much communication with these two groups as we do. So on every single week, I'm talking to 30 or 50 agents and 20 investors. And it's not only me, but the rest of the team. And we're trying to create something that is learning really, really quickly and iterating. What we are trying to create, Ed, is a culture that is we're going so fast in the development of the platform that not even the consumers can keep up with the pace that we have. So we're putting some things and changing some things. In a sense, we're moving fast and breaking things, no? But in a good sense, because whenever we get feedback from the customers that they miss a functionality that we had in the past, then we can go back and take a look at what happened. So there's no one with experience in the sector. So we are, once again, learning by doing. But I think that it's more important the culture that we have built rather than the experience that we have. And we're learning very, very fast of what is the new things. And sometimes it helps whenever you bring someone with fresh eyes that can start iterating and launching new things. I acknowledge the importance of the experience, like Simon was mentioning, especially in these long-term cycles, when there's many of the errors that potentially we're going to be making, that they were done in other parts of the world. But as long as you make experiments and you fail very fast and you learn very fast, it doesn't matter, because none of these mistakes are going to be taking us into bankruptcy. So it doesn't matter as long as there are very small experiments and you can iterate really, really fast and you can continue building from there.
Okay. I think we've probably got time for one more question, which I'll leave to Simon.
Thanks. I think if we were to roll the clock forward, okay, in let's say 5 to 10 years, okay, and I know you've talked a lot about how you'll have grown, you're very patient and so on, but are you still going to be a finance business at the heart of it? Just at the real heart, will you still be making the majority of your revenues from the developer segment and doing what you've been doing for the last 15, 20 years? And is this move into Monopolio as a lead generation tool? Forget the data side, because the data side I think it's a slam dunk and I would do it every day of the week. Do you think it's going to be a material business, like the largest mortgage provider within Mexico, or a serious player? or is it really going to be like 10 to 20% of the revenues? And but in that whole experience, it becomes just part of that end-to-end value chain.
No, as a company, we have extremely clear where we want to get and where we can get. So just to put it in numbers and to put it in perspective, on the B2B side, on the development side, right now we have close to 10% market share. I think that we can get to 20 to 25% market share. That would take us to have, in 10 years, that would be a couple $2 billion of loan book. Then on the B2C side, I think that the market is way bigger. I think that we can get to close to $10 billion of market of loans. And most of it would be securitized through the use of RMBS, but I think that we can get to close to $10 billion. So at the end, whatever you see the FinTech business or the finance company that we have, between the loans that we have within our books and the loans that have been securitized, we should be having a loan book that is close to 12 billion. That would place us within the top 5 financial institutions in Mexico and potentially be one of the top 3 that are providing mortgages. In Mexico, there's one thing that is very interesting, Simon, that is that Mexicans will love to save through real estate. But when you take a look at the mortgages as percentage of GDP, in Mexico, we have 4% of mortgages as GDP. So it's substantially lower than what you would be finding, not even compared with developed countries, but even if you compare it to the rest of Latin America. So it would be like a third if you compare it between Peru, Colombia, Brazil, and those type of countries. So there's a huge underrepresentation of mortgages. But if you take a look at the loan book of the banks already hold like a third of their portfolio within mortgages. So whatever grows whatever grows in mortgages within the next 10 years, it would be needed to be taken by alternative players, because it would be very difficult for the banks to have a greater concentration than this third of the loan book already within their books. And that is where I think that there's the opportunity, the big opportunity. So that's why we think that we can take it to these 10 to 12 billion dollars within the next 10 years. And for that, if I needed to close my eyes and just take a look at what is going to be Monopolio, I would think that Monopolio has 10 to 20 million visitors per month, or even more than that. I think that we will continue. Potentially, we're only going to be in Mexico. Right now, we don't have any plans to expand, but potentially we can be in other parts of the world. But at least right now, we think that the Mexican opportunity is so big in both on the FinTech and on the PropTech side that just to continue reinvesting. And I heard you say in another podcast that the ones that are going to be winning are the ones that do a little bit improvement every single month. And I think that is what we're focusing on. We want to have a little improvement and just doing boring stuff in FinTech, boring stuff on Monopolio. But every single month we're going to be improving, and that is the way that we're going to win in the long term. And but the goal is very, very clear. We need to be a top 2 to 3 financial player in terms of the mortgages and the development. That would take us to $12 billion. And then in terms of the traffic, we should be in 10 to 20 million traffic per month.
Okay, interesting. Jorge, thank you very much for sharing your time with us. Personally, I always really like to speak to disruptors with new ideas, but sometimes it can be a bit like not depressing because you kind of see the future of these companies and maybe they run out of money. In your case, you kind of this bright-eyed new portal coming to town, but you've got this big business behind you. So hopefully we'll hear a lot more from Monopolio and DD360 in the future.
Perfect. Thank you so much for the opportunity to speak to us and to your audience. And just anywhere else in the world, if they have any other opinions, if they want to critique, if they want to tell us anything, if they want to do suggestions of what we should be doing, once again, we are truly innovating. We're not copying this business model. We don't think that there's anywhere else in the world this ecosystem between the financing and the PropTech and everything. So more than happy to share ideas with whomever is hearing this. And thanks a lot for the opportunity and also for the feedback that we receive right now, Simon and Ed.
You're more than welcome. Thank you, Jorge.
Thanks, everyone.